So, so one of those things I promised to do today is to make it as practical as possible. So first off, I'll try to buy crypto. I didn't do that the day before yesterday when I was talking about peer-to-peer. So I'll try to buy a coin for my bank. I mean, I'll try to convert my Naira to my crypto, I mean, to cryptocurrency. I know some of us are just getting started from the basics, so I need to show that example, how to go about it. So after we've done that, then I'll be able to show us how we can trade or buy one particular coin or the other. So just give me a few minutes to open my Android app. So why this is starting up, if you have any question regarding what we talked about yesterday, day before yesterday, you can just put it up in the chat box. Okay, so I have my Binance. I've logged in my other accounts. The reason I'm not using the computer page style is so that we'll be able to see the same way, because I know a lot of us use our mobile phone for some of these things. So we'll be able to have the same results when we try to do this. So if you want to buy a coin, so when you open your Binance accounts, a lot of us, our Binance app will most likely be at Binance Lite. That's the light version of Binance. So that's like for the beginners, that's like beginner version, and it has very, very limited options and features. So when you after you've downloaded your account, you've created your account, you've logged in, what you have to do is click on your where there is the user interface, click on it and convert from Lite to the Pro version. So after you selected the Pro version, go to peer-to-peer trading. So go to peer-to-peer trading. Okay. So I want to buy. So because I want to buy, I want to buy USDT. I'll select this Flitter bank transfer, and then you type the amount you want to buy. So I want to buy, let's say 50,000 now. Then you press yes. So with this, it will filter out those that have crypto within that range that are ready to sell to you. So the next thing you need to do is to look out for people that has as much as possible trade. So people with less than, let's say, 1,000 trade, make sure you are not selecting those kind of people, regardless of how cheap or how much their rate is when you want to sell, or how cheap their rate is when you want to buy. Make sure you are not selecting those people. This is because of probably some of the recent issues we've had with CBN, whereby there's a notice that some CBN personnel were creating Binance accounts and trying to get people by opening peer-to-peer system themselves, just in order to get people's bank accounts and block it and ban it and the likes. So make sure you are selecting anyone. Make sure you are not selecting anyone with less than 1,000 trade. So I can select this. This is like 1,700, and this also shows that this person has been in the system for a long time for you to be able to complete this number of trades. So it shows that this person has been in the system for a long time and it's a bit reliable. So okay, the ads has been updated. So when the ads has been updated, just refresh it. It means new trades have showed up. So this one is 151. I'm not going to select it. I'm going to select 4,000. Also 4,000 trades. Okay, so I'm to type the amount I want to buy. So the quantity I'll be getting is $86. So okay. Okay. I said the other time that there's an interface for you to chat. So this is the person's terms, no third-party payments, no corporate account payments. payment name. Okay, proof of payment will be needed. Please upload it after payment. So all of that. So this order will be cancelled in 14 minutes. So if I didn't make this payment in 14 minutes, this particular order will be cancelled. And I can also decide to cancel it myself if I want to cancel it. If you are selling your coin, you won't be able to cancel it. You have to wait probably for the time to go out if the person doesn't respond to you. So the next thing is I need to check the next thing is I've agreed to the terms. So I'll go to payments page. So this is the person's payment details. So I'm to pay this amount into this person's account. So I'll be doing the transaction now on my phone. So I'm sending the money to a CUDA account. Okay. 41493. Okay. So yeah, I've made the payment. So after you've made the payment and you've confirmed the payment, what you need to do is you need to you need to notify the seller that you've transferred the money. So I'm expecting the seller to release this coin within the next 30 minutes, within the next 31 minutes. So I can just decide to just chat him up that um, okay, so if you need to call the customer, you can select this call, and this is the person's number. You can decide to call to tell the person that you made the payment if the person is not releasing the coin. So if I have issue with this guy not releasing the coin in 30 minutes time, then this is a place to place an appeal to show them that I've made the payments and this person has not done the needful by sending the coin to me. So so yeah, so I'll be waiting for him to um to get back to me in 30 minutes, to release the coin in 30 minutes. So while we wait for that, okay. So while we wait for that, let's see. Okay, so while we wait for that, let me quickly try to explain. Okay, question. Okay, proof of payment. I can decide to send in proof of payment and I can decide not to send in. I can decide to, because you are not, in the first place, you are not to actually send any proof of payment. What the person needs to do is to check his bank account and see to confirm that the money has been sent. I can just decide to send him as an extra. I can decide to send him as an extra. So let me see if I can send the person proof of payment. Let me send the proof of payment. Okay. So I'm trying to get the proof of payments that I'm sending to the person. I'm still on it. Someone is asking, since we are to look out for people with high record trade, how do I sell my coin as a beginner? Okay, if you are selling your coin as a beginner, your record, your trade record won't show. There won't be a show of your trade record. Anybody you are seeing there actually have they have an advert. There's an advert on their account. So there's an advertisement on their, they created an ad. They created an ad to show that they want to sell or they want to buy crypto. So it is those people, those are the people you need to check before you say you want to buy or you want to sell. But for you that want to buy or sell, you don't need to do that. It's not needed for you. You don't need to have that number before you can. You don't need to have any of those numbers before you can do before you can run any of those transactions. Okay. The picture I'm sending is not reading. Still here to release the coin. So okay, so while we wait for him to release the coin, while we are still waiting. Okay, yeah. While we're still waiting, so if you are planning to buy, so now let me quickly explain what you need to do. So when I checked through some of the questions people asked from the form I gave out for people to fill, I see some people asking how much is too much to invest or how much is. So when you want to invest or when you want to buy crypto, it's dependent on how much you have. Like you can buy as low as 10,000 naira. Right? You can make transactions for as low as 10,000 naira. You can buy as low as 10,000 naira. So it's dependent on how much you feel you can make do away with at that point in time. Okay, it seems okay, it has been completed. So yeah. So the order has been completed. He has made the payment. Yep. So after that, after the payment has been made, so you have to go to your, the money will not be inside your wallet. If you check your spot wallet now, if I check my wallet, if I check my wallet, I won't see the money. I won't see the money here. Where the money is under funding, because peer-to-peer is under funding. So what I need to do is to transfer the money from my funding account to my spot wallet. So I select USDT, then maximum transfer. So it means if you want to sell too, you have to transfer the money from your spot wallet to your funding wallet. So that's the way it works. So now that I have the money in my spot wallet now, okay, now that I have the money in my spot wallet, I can now decide to use it to buy whichever coin I want to buy. So I go to the market, I select market, then I select, so I go to sports, Then I select USDT. If you select BNB, so these are the trading pairs that are available. So these are the different coin with their trading pair. So let's assume what you have is BNB and you want to convert it to any of these coins. So this is what you select. If you have BTC and you want to convert it to any of these coins, this is what you select. Or you want to sell those coins into BTC, this is what you select. But what I have is a USDT. So I want to use USDT to buy any coin that I want to buy at this point in time. So I look out for different coin and I look for the one I want to buy. Okay, because what we are doing here is example. So let me select Matic. So you select the coin, then you select buy. So this is how the buy interface looks like. You have the buy and you have the sell. So I'm about to explain what all this function is. So when you want to buy at your own preferred price, there is something. So there are different options when you want to buy a coin on exchange sites. A lot of exchange sites, this is what they have is similar to something like this. Some don't have some of these options, some do. So there is the limit option, there's the market option, there's the stop limit, and then the OCO. So the limit function is a function whereby you can type the price you want to buy the coin. So let's assume the coin currently, the current market price of the coin is 2.172. So I can decide that I don't want to buy it at this price. Where I want to buy it is at when it is $2. So I'll press $2. Then I'll press the amount I want to buy. Maybe if I want to use 25% of this $86, then I press 25%. If I want to use 50%, if I want to use 75%, or if I want to use 100%, that's if I want to use all to buy it. Or if you want to press the amount you want to spend, maybe I don't want to use any of these 25, 50, maybe I just want to spend $30. So I just press the amount in USDT and it will show me. So after I've done that, I'll click buy. So when I click the buy button, because the current market price is not the price I want to buy it at, it will create an order limit, an open order for me. So it is until this particular coin reaches this price, that is when my buy order will be triggered. If this coin doesn't reach this price, maybe let's say in the next 6 months, this buy order will still be there. And the money will not be available for me to use except I cancel the buy order. Okay, so that is how limit order works. So if I want to buy it, let's say, so if you want to buy it at whatever price you want to buy it, just type the price lower than the current market price. Let's say I want to buy it with 0.5. You type the amount you want to buy, and then you click buy. So let's say you don't have the patience and you don't even care what the price is at that point in time. You just want to buy immediately. So what you select is you select the market price. So at the market price, the coin is going to buy at that current market price. The current price that coin is at that particular point in time. So if I select my market price now and I just select the amount I want to buy, so I want to buy 25% at this market price. Immediately I select buy, it won't create a buy order for me. It is automatically bought for me, like automatically. So how do I know this? If I check my wallet, yep, I'll see that I have $21.5 of Matic that is being bought at current market price. Okay, percentage changes when buying. Those percentages are just the percent you want to buy it. The percent of your total amount, total available USDT. So 50% of my 65.
Sorry, that's not what I mean. I mean the percentage in front of the Matic / USDT, like that one.
Okay, the one at the top. Okay.
Yes, thank you.
Okay, I will explain that. Okay, this percentage, this 5.14%, shows that from the low price of this coin today, this coin has done 5% from its daily low, like in the last 24 hours. From the last 24 hours low, this coin has done 5% increase. That's if you're able to buy it at within the last 24 hours, the lowest price it is within the last 24 hours. If you're able to buy the lowest, you get it at you'll be up by 5%. The chart here will not open because of this emulator. Let me see. Okay, this is the chart. So this is, I don't want to jump to this chart. So let me leave the chart for now. So let me just keep explaining what I'm explaining. Okay, the 3x, 5x in front, what does it mean? Okay, I'll come to that. I'll come to explain. We'll get to that level. Let's just take it step by step. Let's explain it step by step. Yeah. So the market price. So the limit and the market price, I've explained that. So the stop limit and the OCO, they work for your sell order. So when you want to sell too, you can decide to sell it at the current market price. So I press 100%. I'm selling off all that I have at that price. Or I can decide to place a limit of where I want to sell it. So I want to sell this coin when it is $3. So 100%. If I'm selling it when it's $3, I'll be getting 29.7. So I press sell. So remember, I press sell, it will create a sell order for me. So until the price of this coin reaches this price, this particular coin will still be on this sell order until it reaches that price. So that is how sell order works. So the next option, I've explained limit, I've explained market. The next option is a stop limit. So the stop limit works in such a way that it's like a conditional statement. So it's like an if and else statement. Now, so you want to sell this, you don't want to sell this coin right now, but you are looking at a possibility of this coin. Maybe you are looking like, okay, this coin might dump maybe later in the day or later at night, and you don't want to, probably when you bought this coin, you bought it at 2.17, right? And the coin has jumped up to, let's say, 2.20 now. And you don't want to sell at a loss if there is a market dump, or you don't want to lose a certain amount of money if there's a market dump. And you don't want to sell it outrightly at that point in time because you think the market can still go up, so that you won't sell it and the market start going up and you start blaming yourself that, why did I sell this coin? So in order to mitigate this, that is where stop limits comes in play. So with stop limits, you are telling the market that at this particular price, at this particular stop, if this market reaches 1.61, that's the stop. If the market reaches 1.61, place a sell order for me at 1.61. I don't know if you get that. If the market reaches this price, this low, it could be 1.4. If the market reaches, 2.14, sell it at 2.14 for me. So if you press if you select limit now and you press 2.14 and you press sell immediately, or those Binance have created, they've created a machine. Yes, they've created an algorithm whereby if you try to sell it at a price lower than the current market price, it will automatically sell at the market price right now. But before now, if you press this 2.14 and you press 100%, it's going to sell it at 2.14 immediately. And the market is higher than that price. So you don't want that. So you select stop limit, you press 2.16, 2.16. You select the amount you want to sell. Let's say I want to sell 50% of this if it enters that price. So I press sell. So you are confirming that if it gets to this price, sell it. So if the last price drops to or below 2.16, an order to sell at this price will be placed. So I press confirm. So this will not sell. This will just create a sell order limit until the price of this coin reaches this price. This particular condition will not be fulfilled. So that's why I said it's a conditional statement. So it's a condition if the price of the coin reaches 2.16. So that is how stop limits, that is how it works. So for OCO adds an extra layer. It's just like it's just a stop loss too, but it goes the extra mile. So it has the usual stop limits. So if this coin gets to 2.16, sell it for me at 2.16. But you want to take profit. So if this coin gets to let's say 2.5, take profit for me too. So 50%. So the first limit is to take profit at a higher price than the current market price. The stop and the limit, the next stop and limit, is to sell off the coin at a lower price if the market dumps to that price. We get that. So sell this coin at 2.5, stop limit. Okay, I won't sell it at 21, 2.16, yeah. So sell it at 2.5, but put a stop limit at 2.6. So any of these conditions that gets met first off will be the condition that will be triggered. So if the price increases to put 2.5 first before getting to the low of 2.16, then the coin will be sold at 2.5. But if the price drops to 2.16 first before it reaches 2.5, it is 2.16 condition that will be made first. So I click a sell button, sell. So it places two conditional statements. If the price reaches 2.5, sell it off. If not, if the price reaches 2.16, sell off. So whichever condition gets met first off is the condition that will be triggered out of these two. So okay, I should take the OCO again. Okay, I should take the OCO again. So the OCO is an option to take profits and at the same time put a stop limit. We understand stop limits very well now. So OCO is just like a stop limit with a take profits option. So what happens is that you are placing a stop loss, which is a stop limit, if the price falls. At the same time, you are placing a sell-off, a price take profits price. So regardless, whichever condition gets met first off will be the condition that will be triggered. So if the price reaches, let's say you are placing it at 2.8, if the price reaches 2.8 first off, before it reaches, let's say your stop limit is at 2.11. So this one has to be the same. The reason these two has to be the same is that you are telling the market that when the price reaches this price, place an order for me at this price. So because of course the market is going down, you can actually say when the price reaches 2.11, place an order for me to 2.13. But if the market is dumping, the market is coming at a free fall. So you are expecting it to go lower than its previous price if the market is dumping. So what you are saying is, so that's why the price has to be the same thing. So what you are saying is if the price reaches 2.8 first off, then sell it off at 2.8. But if the price reaches 2.11 first off, sell it off at 2.11. Then you place 100% condition and you sell. Okay, so this is how it works. Do you understand this now? Also on Binance, for you to buy or sell any coin, it has to be nothing less than at least $10. So you can't buy a coin less than $10 in USDT value, and you can't sell a coin less than $10 in USDT value. So is there anyone still having problem understanding the OCO or stop loss or stop limits? Please, if you don't get that, kindly type it in the comment box so that I will know. Okay, fine. Since we can, okay. Okay, the stop limits. Okay. Affluential. Affluential. Yeah, you can unmute your mic and ask your question. The affluential, you are raising your hand. Ask your question. Okay, I should go over it again. Oh, okay, okay. I'll go over it again. I'll go over it again. So we understand limit buy and market buy. We understand OCO for buy. Yeah, it's same thing. What you are the thing with OCO is that it's used majorly for when you want to sell a coin. That's what OCO is used for when you want to sell a coin. Because when you want to buy, it's like placing limit for there's no way you want it to work with buy order. So majorly what OCO is used for is when you want to, it's when you want to place a sell order, when you want to sell a coin. You can actually still place it for, you can do it for buy order. So for buy order, you are telling the market that when the price of this coin, which is when the price of the market, when the market probably dumps to 1.1 to 2.1, then the market should place a buy order for you at 2.0 or whichever price, which you can actually do with limit buy, because with limit buy, you can actually enter the price you want to buy the coin. And it will only get triggered when the market reaches that price. So that's why I said OCO is majorly used for the sell option and the sell option. So we understand limit sell and market sell too. So stop loss. So stop limit works when you want to sell off a coin. Like you want to sell off a coin if a particular price is reached. So you want to sell off Matic if Matic reaches $2. So Matic is currently trading at 2.1172. So let's say the price has moved to 2.2 now. Let's say the price has moved to 2.2 and I bought it at 2.17. So I think the market has already moved and I'm thinking it's going to move more. But, or at the same time, I don't want to lose more than my capital. So I place the stop limit at my capital, which is 2.17. So if the market price doesn't reach, so you are telling the market that if the price reaches 2.17, sell this coin for me, like place a market order, place a sell order for me at this price, 2.17. So if the market doesn't reach 2.17, the sell order will not get activated or will not get triggered. It will just be in your order book. So probably when you want to sleep, you think there will be a dump in the market and you won't be available to watch the market or how everything is happening at that point in time. So what you do instead is you place a stop loss. And by the time you wake up, you think the market is okay and you'll be able to watch the market. You cancel the stop loss. So that is how stop limit works. So stop limit works with only the sell function, sell option function, when you want to sell at a particular price, at a lower price than the market. You think the market will fall to a particular lower price than it is currently. Then OCO is it's an extra level of stop loss whereby you have a price to take profit. So you think you want to take profit when this coin is like, let's say 20% up, or when it is 100% up. So you put it at, let's say $4. When this coin is $4, I want to sell it. At the same time, the market can do anyhow and you don't want to lose a lot of money. So you place a stop loss at $2. So you are telling the market that if the price reaches whichever of this price action happens first, then sell off my coin. So if the price, if the market reaches $4 before reaching $2, then I'll be able to sell this coin at $19, 19.8. I mean at $4, yes. I'll be able to sell it at $4. But if the market reaches $2 first, then I'll be able to sell it off. Then the market will sell it off at $2 instead. So if you click the sell button, it will create the two condition price and it will be on my order book. So the coin won't sell off. If you check your market, if you check your wallet, your coin will still be there. Your Matic is still there. The Matic is still there. It only gets sold off to USDT if the price meets any of these conditions. So if it goes lower than, if it gets less than or equal to $2, it will sell it off. Or if it gets to $4 first off before getting here, it will sell it off at $4. So that is how OCO works. So do we understand this now? Do you have anyone still not getting this? Okay, when you buy a coin, there's like a little portion still remaining. Okay, yeah. The reason is because at every point of buying or selling a coin, a small percent is actually being charged by the exchange. The amount is very, very minute, like very, very small, that you might not even notice. So that is like their own charges for maintaining the exchange site. So that is why you see when you sell off coin, you see some little remnants. Like you see all of this coin, you see very, very small remnants. So exchange, all of this exchange, a lot of these exchange have been able to incorporate a particular function for you to be able to convert all these small assets into the exchange default coin. So for Binance, their default coin is BNB. For FTX, their default coin is FTX. For KuCoin, their default coin is KCX. So they've created an option for you to convert all of this small money. You can just press all. So it will convert everything into the default coin. So because I have this Matic, it's also noticing this Matic as a small coin. So you can just remove it and then convert. So this is the amount you get in BNB. So you can just convert it and leave it there. So by the time you convert it, all of those remnants that is remaining would have been converted to BNB, and you most likely not see them there. Most likely not see them there. Yeah, you can see. You don't see them there again. These two are not listed on the exchange, so that's why they are not converted. So you most likely not see them there again. So do you get that now? Okay, so that is how the trading part, that is how it works. So on an exchange, there are different kind of coin. So there's the usual coin which we have here, all these coin that with USDT. There are fiat coin. These are coin that are pegged against the traditional currency. So this Luna is pegged against Australian dollar. So if you want trading pair with Australian dollar, I think this money is Indian. I think this Indian money. This BIDR is for India. This BRL is for Brazil, Brazilian. When Nigeria was still, before the Nigerian ban, there's an option for you to buy or sell in Naira. I don't know if, okay, still there. So there's the Nigerian option. So you'll be able to see the coin. You'll be able to see the Nigerian value of those coins. So okay, you'll be able to see the Nigerian value. I think the only option available in Nigeria currently is just the USDT because of the ban. So they've removed all other coin pegged against Naira. So this is the fiat option. So if you go to BUSD, BUSD is Binance dollar. So these are coin pegged against Binance dollar. Okay, why are some green and some are red? The usual green and red is just a show of upward and downward movements. That's all. It's just the typical. So the green one shows that it has moved a bit higher than its previous current price, maybe a few seconds ago. The red is showing that it has moved below its previous current price few seconds ago. Yeah. So let's go back to USDT. So this is the 24 hours change of every coin. So right here you have okay, so right here you have the 24 hours percent change. So this particular coin, local coin, it just got listed. So that's why you are seeing this 1,500. All this kind of coin, because they just got listed, a lot of times their lowest price is always picked up by bots. So don't be deceived by this price you are just seeing. A lot of times coins that are with this kind of percentage change are coins that just got listed. So a lot of times bots are able to pick up the price at a very, very small price. So there will be some time you come to Binance and you see some coin doing 800% and a certain percent. Those kind of, if you check those kind of coins very well, a lot of them just got listed. And I would advise that you don't buy a coin that is just listed, because a lot of times they always dump after the listing. A lot of times they always dump after the listing. So when you see a coin just getting listed on Binance, just leave it. In a week or 2 weeks time, you see its true price after that. Yeah, so this is the 24 hours change. So this is showing that Flux has a 17% increase. So also you can, if you go here, you see coin that has dumped in the last 24 hours. So Dusk has a minus 6% dump in the last 24 hours. So this is their percentage change in the last 24 hours. So also there are also some coin that are called leverage coin. So we are moving a little bit into leverage now, leverage trading. So the usual trading where you trade with your normal spot, your normal amount with spots, is called spot trading. So spot trading is you trading with your normal money and you are getting your actual coin. And it's the price valuation is based on the current market price of that coin. And the coin doesn't get liquidated. It stays there for life, except probably if the coin gets removed from the exchange site. So the coin stays there for life and the value keeps changing, increasing or decreasing based on what the current price of that particular coin is at that point in time. But there are some other coins that are called leveraged coin. So an example is you see a coin with down. Have you deleted that? Let's see if I can get them. Okay. Okay, you can see a coin like this, BTC up. No, okay, it's in zone. Okay, I've searched for it, I've seen it. So a coin like this, BTC up. This is not the actual price of BTC. This is just $52. But this BTC up is a leveraged version of BTC. I think they used to write the leverage. Let me check BTC down. That BTC up is not the same coin. Down. Okay. Yeah. Okay, let me use ADA as an example. So ADA up now. The current price of ADA of ADA is not $32. The current price is I think 1.41. If you check the markets, current price is 1.41. But this leverage token, they leverage up a lot of times. The leverage is always times 3. So if I'm buying this particular coin, I'm buying it at times 3 more than the default, the current market price. So the usual market price, I'm buying it at times 3. So if I'm buying $10 worth, it means I'm buying $30. In actual sense, I'm buying $30 worth of the usual ADA coin. The usual $10 ADA coin I'm buying. So whatever happens to the usual ADA coin, I'll be getting times 3 of whatever is happening. So if the price goes up, if the price of ADA does 5%, the new price does 5%, this one will be doing 15%. If the real price dumps down to, let's say, if it dumps down to, let's say, 5%, the real coin, if it dumps 5%, this particular one will be dumping 15%. So that is how leverage token, that is how they work. And a lot of times, if you are buying leverage token, make sure you are buying it when the market is in a dip. Like when there's a very, very big dip and you think the market is going to move. And if you are buying leverage token, make sure you are not staying on it more than a day or two. Maximum, a day or two, you sell off the leverage token and you get your money back immediately. Because the moment you start leaving it for a long time, there is something called balancing. They do a balancing of this coin, whereby this price, this particular actual price it is showing now, might not be the same price it will be showing by next week. Okay, what's the question now? How do you recognize a leverage coin? So a leverage coin are a coin that has anything up. You see them something up on some exchange, something up, something down. They are leverage token. So with something up, let's say this adder up now, it's telling you that you make profit if the coin keeps increasing for adder up. So if you notice that a market is going to dump, probably you notice that this market is going to dump and you want to buy up leverage token. So let's say adder down. So with adder down, if the market is going to dump, maybe you notice this market is going to dump, this particular coin is going to dump. What you buy is the down coin. So the more the real coin, the more it dumps, the more you make money from this one. So the chart of adder down will be going up when the actual adder is going up. I mean, it's going down. Adder up goes up when the coin is going up. Adder down goes up when the coin is going down. So you profit when the market is going down. Is there a leverage coin for every coin? No. So exchanges decide to pick some coin, not every coin. So there are a few coins that they pick and they put their leverage token, because some of these things can be very, very volatile. Imagine the usual crypto being volatile already, now leveraging it up to like ×3. There are some that has ×5 leverage value, some have ×3 leverage value, depending on what the coin is and depending on what the exchange is. So they have different value. So also there are some coin on some other exchange, you won't see up and down. What you will see is you will see bull or bear. So you will see either bull or either bear. So that is what you will see on some exchange. Okay, you don't get the leverage token. How do you know the value of the leverage? They used to write it. It's always stated. I can't see it here, but it's always stated somewhere. Let me see. Let me see if it's going to show. Yeah. So yeah, it's showing, when you click by, it's showing the leverage is ×3 of the actual leverage. So it's going to show you leverage minus 3 times. So it's 3 times of the actual coin. If I select the up, other up. If I select the other up and select buy, I'll see the leverage too. So this one too is also, this one is 2 times, 2.18 times of the actual leverage. So if the actual coin goes 5%, this one will be 10%. They've stated the leverage here. They've stated the leverage here. So someone says he doesn't understand the up and down. What I mean by the ups and down. So the up and down term is just to show that this particular coin is a leverage token. It's not like you see the same thing on every exchange. Some exchange, they won't put up, they won't put down. What you see is bear or bull. Okay, yeah, you can unmute your mic to ask the question.
Okay, what I mean is this: like, if I should buy this adder up now, and I discover that the market is going to dump, is it that I'll sell it to adder down? Just that part is what I don't.
No. Okay, no. You are not selling it to adder down. So if you are buying this adder, okay, is there anyone that wants to ask question again? Okay, so what it means is that if you want to buy a normal coin, you buy the usual coin, the normal coin, that is adder. which is the current price is 1.4. That's the current price, right? But if you want to buy the leverage coin, so you only buy leverage coin if, let's say for example, you have $100 now, and you think a particular coin is going to move, and you know the coin has a leverage coin, you think a particular coin is going to do a very, very high percent, and you want to leverage on the amount you have, such that your $100, because this is a ×2 leverage, would work as $200. So that is when you go for leverage token. So when you buy the ADA hub, hoping that the market of ADA pumps up so that you'll be able to have ×2. Yeah. So when you, the exchanges are the one that set the price. So the price are not always real. So you can see 32 today and still 50 tomorrow. What the core thing is just that it is a ×2 of the actual coin you are buying. So if you buy this, let's say I buy one, let's say I buy this particular coin now, and the market starts dumping, of course, the coin will dump, like the price value of the coin will be dumping, because what I bought is ADA down. So if the usual ADA down is dumping 5%, what I will have will be 10%. That's 5 times 2. So that is for ADA hub. So if you notice that it is dumping, you just sell it off straight up to your USDT. That's all. But if you notice that, okay, this market is already too high, this coin is going to dump based on your own valuation. So you buy the leverage token ADA down, not ADA hub this time around. You buy ADA down because you think the market is going to dump, and you think you benefit a lot, because so the more the market is dumping, so let's say for example, when Bitcoin was $60,000 now, you bought BTC down, and then the next minute, maybe in few days or few weeks time, the market has already dumped to, let's say 50,000. So the difference between that 60 and 50 in the usual coin, the dump might just be 7%, but because you're on a leverage token, which is let's say BTC down, and it's let's say ×3 now, your own 7% will be 21% profit because you bought the down token. Actually, I don't always advise people buying leverage token or going into anything leverage, but I have to just explain this so you don't buy the coin and think, oh, I bought a usual coin. No, they are special kind of coin. There was one time someone was asking me if you can buy a particular coin, and I told the person that this particular coin is a leverage token. So on some other exchange, what you will see is might be ADA bull or ADA bear. They mean the same thing. You just need to check for the leverage percent, the leverage times of that particular exchange site. So some can put it at a 5 times, some can put it at a 3 times. For some exchange, what you will see is let's say ADA 3L or ADA 3S. So for ADA 3L, let me just put it in the chat box. Because I'm using ADA as an example, that's why I'm writing. So you see ADA 3L. So ADA 3L is the same thing as ADA up. So he's saying ADA up with ×3 leverage. If you see, some will have ADA 5L. 5L is just ADA. Okay, it's not ADA with. Okay, it's the same thing as ADA up. It's ×5 leverage. So that is for ADA 5L. For ADA 3S, so ADA 3S is the same thing as ADA down with 3 times leverage. So if the market dumps, you'll be getting 3 times of that ADA down, and then so if you see ADA 3S, I mean 5S, what you see is what it means is ADA down by 5x. Yeah, Alim, you can unmute your mic, please.
Okay, I don't want to get it straight. Let's say you have 100 USDT.
Okay.
This ADA up coin.
Okay.
Let's say you are buying a unit of this ADA up coin at this price now. Let's say 32.4.
Okay.
And the market pumps.
Okay.
So the market pumps like let's say 5%. So
That's
is
the
it
usual.
the $32? Yeah, the usual adder.
Yes, yes.
So is it the $32 that will be multiplied by 2? Or what will you get exactly?
Okay, what you will be getting will be ×2 of your capital at your entry. So if the usual adder, ADA now, that's why I'm saying a lot of times don't follow this price they are putting there. This price is just, there's a way they calculate and they're able to get this price. So you can check up some other days and that particular price will not be there. And you won't see that particular price. So what you just need to check out is the leverage amount. This leverage, that is the most important thing. That's what you have to deal with. That's what you need to know. So the underlying coin is Cardano, that is ADA. So if the usual ADA moves 5%, the usual one, and your entry is when it was, you enter when it was probably 0% and it moved 5%. So your usual ADA coin now will be 5% up. But if it is on ADA up coin and you bought in when the usual ADA was 0% and it moved 5%, the usual ADA up coin will be 10% up. So you most likely see this price. There will be a very price change here. So when you sell the coin, it will be in the range of 10% profit. By the time you sell the coin, the profit you see will be in the range
it will be following
10%.
ADA, not this ADA.
Yes. Yes. It will be following the growth percent of the usual ADA coin. So if the usual ADA coin dumps, if it dumps 5%, this will be minus 10%. Do you get it now? So if the usual ADA coin dumps 5%, this will be minus 10%. So that is how it works. The same thing with the down. So the down works when the market is going down. So if the market is going down, you profit from the market going down. So that's why some people always say you can make money when, regardless of the position or the area the market is going. So if the market is going up, if you buy up, you'll be getting a leverage percent of that. If you are buying down, you get a leverage percent of that. So that is how the up and down, that is how it works. So these are leverage tokens. Now, okay, if you have any question, if that is still if it's still confusing, please put it up in chat or unmute your mic and ask your question so that we can move forward. So that is just part one of leveraging. So there's another form of leverage whereby you leverage a coin. You leverage a coin at a particular times, and then there's liquidation. So liquidation works in such a way that if the market reaches a certain price, the whole coin, like the whole money, the total amount you have, or the total of your position in that coin will be liquidated. It will be liquidated in such a way that you won't have that money again. If it is liquidated, you don't have that money again. That money does not belong to you. So when you are leveraging, when you are doing this leverage, at that point, what is happening is that the exchange is borrowing you money to create a position. So I will explain that now. So someone was asking that what does all this 5 times, 3 times, what does it mean? What it means is that this particular coin has a margin option of up to 5 times. So that is what it means. It means that this particular coin has a leverage option of up to 5 times. Anyone you are seeing, it means it has a leverage option of up to 3 times, up to 5 times, up to 3 times. So that is what it means. Some has up to 10 times. Yes, 10 times. So let me just select one and we'll see how that plays. So there are 2 options of margin trading. There is the isolated margin trading, and then there is the cross margin trading. So now, let me try to explain so that we don't get confused with all of this. Actually, if you are starting from the basics, you don't actually need some of these things. What you just need to know is just to buy your coin on spot and sell it. This is an extra play if you are trying to leverage on profits, but at the same time, it's a dangerous play because if you are trying to leverage on profit, you have to think if the market dumps. So if the market dumps, you'll be getting ×3 or ×5 of the usual losses that it ought to be. If it pumps too, you get ×3 or ×5. So that's the way it works. So let me select IUSTX. So if you want to select the margin option, you'll see a place, you see this alert, currency, and margin. I'll still explain this alert. I was talking about notification, adding notification the other day. So that is what this alert works for. I'll do that very soon. So you can see this margin. So if you select margin now, yeah, this is a cross margin. So you can select, it has two options, isolated margin. Isolated margin has an option up to 5 times. Cross margin has an option of 3 times. So this is how it works. So with cross margin, what you are doing is, so if I want to buy this coin with cross margin, what I have to do first off is to convert my USDT from my spot wallet into my cross wallet. So I'll press the amount I want to use. So I want to use let's say $60 now. I want to use $60. I'll confirm the transfer. And after I've confirmed the transfer, I'll go to my wallet. Then I'll go to the margin option. So I'll go to the margin option. I've selected the margin option. And then this is the amount I have. I have $60. So with the cross option, I can borrow up to ×3. So it means if I press borrow, I have $60, right? So I want to borrow USDT. And I'll press maximum. So I'm borrowing $133, which will make my money 60 times 133. I mean 60 plus 133, that's something around 200. So 60 times 3 is 180. So my $60 is now having a value of $200. Did we get that? My $60 now has a value of $180 actually. Because I have this particular coin GRT there, that's why I'm having that. So I have a total debt to pay back of $133. So how do the exchange profits from this? There is an hourly commission that you pay. It's very, very minute, 0 point something something. You can see it there, USDT. So 0.0025% is what is the charges that is being incurred on this borrow every hour. So if I'm done with it, if I'm not using the leverage, I will repay the amount and I will confirm. That's all. So I've borrowed the money now. So what that means is that instead of having $60 to use now I have 190 something dollars, $193 that I can use. So I'll go to trade, then I'll select the margin option, cross margin. So the other time I had $60, so I have $93. So I can buy this coin. I can buy $96 of this coin because I've already borrowed more. So because I've already borrowed more, that's why I have this. So if I buy this coin now, so let's say I just bought it at market price. So I'm buying this coin 50% at market price. I press buy. So because it is a cross account, what happens is that with this cross account, it is expected that what happened is that with this cross account, my whole money in this account is used as a collateral. So there's an actual price that this coin must not dump to, that if it dumps to that price, the whole of my $60 that I sent to this place will be gone, will be totally gone. So the more collateral I have, if I add more money inside this particular wallet now, the further my liquidation price, they call it liquidation price. So how do you know the liquidation price of this particular coin you bought now? So I'll select the coin, then I'll go to the position USDT. So the position USDT will show me, so this is the value of the coin I bought. I bought $96. I bought it at a price of 0.18. So for the whole $66 to be gone, then this particular price has to dump minus 55%. So if the price reaches this particular price, the whole of that amount will be gone. Like the whole of the amount will be gone if it reaches this price. So if I buy more, this particular liquidation price will be closer because the amount I have as collateral has reduced. I don't know if we get that. So because the amount I have as collateral has reduced, so this liquidation price will be up. So it might be, let's say 30%. So if the market of this coin dumps 30%, I'll get liquidated, and the total of the coin, everything will be gone. So you only use this if you are trying to leverage on the amount you have. So let's say you have $300 and you want to have a leverage of, so if you are using times 3, that's 300 times 3. So it means you have 900. You have 900 to be able to buy the coin. So instead of buying with 300, you can now buy 75%, or you can buy with 50%. But if you are on cross, make sure you are not using the whole 100% to buy the coin. Because if you are using the whole 100%, it means you won't have collateral, which means that particular coin, any slight dump of that particular coin, all of the money will be taken from you and you get liquidated. So that's what liquidation price means. So if this coin doesn't dump to this price, I'm fine. So I can leave this for as long as possible. So the more it grows, the more I'll be, because I'm using more money. I don't have that $93. What I have is $60. But because I'm able to borrow money, I'm able to buy the coin with $93 at a leverage. So that is what leverage means. I hope you get that. So for isolate has something similar to that. So you borrow the money and you move it to, so instead of selecting cross, you select isolate. So isolate is 5 times. The isolate of this particular coin is 5 times. So you press, this is where you press this transfer, and then you send the money you want to use. You send it from your spot to IUST isolate margin. You confirm it. So from here, instead of selecting normal buy, what you select is auto borrow. You can see that my $5 is now $25 because I'm using a leverage of 5 times. You can increase it and you can reduce it. So I'm not using $5 to buy this coin now. I'm using $25 because of this leverage. So let's say I select 75%. So I'm using $14 to buy this coin. So if I press buy, so confirming. So this is bought. So if I want to see what price that particular coin gets liquidated, I'll go to wallet. I'll go to isolate and I'll be able to see it. So I can see someone. If you get liquidated, you still have to repay. No, you don't have to pay any money because they've calculated everything. So if you get liquidated, all of your money is gone. You are not paying anything, except if you have a minus. If you have a minus account, there are some exchange that if you get liquidated, you can have a minus account. An exchange like FTX. So you can have a minus. So if you have a minus, at any point you move a money to that exchange site, they will remove that money. Of course, the way the usual minus works. So that is how this particular leverage, that is how it works. So that is how it's not showing IATX. Okay. Position. So the liquidation price for this particular coin to liquidate, the coin has to drop minus 15%. So if it dumps minus 15%, which is at the price of 0.091, the whole of my $5 will be gone. No, you can't move them to a wallet like Trust Wallet. It's a margin coin. So that is why it's on a separate place. The only coin you can move out of your exchange site are your normal spots buy. So your margin, your leverage token, up and down, they don't have the withdrawal. You can't withdraw them. You can't withdraw them. They are just features you can use within the app. You can't withdraw them. Okay, someone else asked a question. Is there anyone? Okay, so you can't withdraw them, and the money stays within all this interface. You will see that your spot wallet is different from your margin wallet. On some exchange, they use everything as your collateral, even the money you have and everything. So if you are tired of this and probably you don't want to do the play again, you just go to your trade, and then you go to the sell option. So you can click auto repay. So with auto repay, you are repaying the total amount you borrow and everything. So you just sell. So it's going to sell up everything, and I'm not borrowing any money again. My $5 is back. My actual price is back. So that's the isolate. So let me go to cross. So for cross, let me sell off this. So I'll change this back from isolate to cross, and then click auto repay. So I click auto repay and press sell. So sold off. Okay, it's still showing my total debt. So I just press repay USDT. Yep. So I've paid up everything, and I have my $66 back. So that is how margin trading works. So margin trading, their leverage percent don't go beyond 3 times for cross and 5 to 10 times for isolated. They don't go beyond that. So there is another option which is much more higher. So if you want to, let's say you think this 3 times and 5 times is not enough, and you needed something much more than this. So there's another one called futures trading. So we'll go to that now. I just need to explain all of this so that we'll understand how they work. So I need to transfer my money from my cross to my spot wallet back. So for my spot wallet, I'll transfer it to my futures wallet. So futures wallet, there's a button for futures wallet. So, okay, I have money already. I have $151 here. So the same way I explained for margin trading, where there is cross and then there is isolate, the same thing applies here. So the difference between this and margin trading you just saw now is that this has an option where you can change your margin from times 1 for BTC to as much as 125 times. So this means the more your margin, the easier it is for you to get liquidated. So if you're on, let's say 25%, your liquidation price will be farther than if you're on 125%, because for 125%, you make profits or you make loss with every. So if there's a 1% move on BTC, what you'll be gaining will be 125%. If there's a 1% dump on BTC, what you'll be losing will be 125%. So basically, that is how futures trading works. So there are different options, different coin options with different leverages. So I can select, let's say I select, let me select a particular coin. So not every coin has up to 125. There are some coins that that is not more than 25%. But if you are going to play with futures, I always advise people not to use more than 10%. So you use 8% and make sure you are not using your full money. If you are using cross, you are using every of the money in your account. So all these $51 will be used as a collateral. So if I open a position, 25, opening position here means I'm longing this coin. So if there's an increase in this coin, I'll be gaining. Shorting a coin means if there's a dump in this coin, I'll be making a profit. So there's difference. So I'm longing this coin at this price. So I select this price and I open a long. So it will create a position. So this position is the details of this coin that I just longed right now. So this unrealized P&L is my profit or loss at that particular point in time. This margin is the amount I put in, which is $12. This is my entry price. This is the current market price. And this is my liquidation price. So if the price of this coin goes to $0.235, the whole of my $50 will be gone. So in cross, the whole of that money will be gone for cross trading. If it's isolate, what will be gone, what will be liquidated will just be this $12. So my remaining $38 will be saved. But if it is cross, all of my money, all of my $50 will be gone if there's a liquidation. So you can set your profit and loss. So if I want to, I can set a stop loss here. So I want to sell this at 0.5. So if I'm selling it at 0.5, my profit will be $7. So I can put a stop loss at when it is 0.41, which will be a loss of minus $12. So that is how futures, that is how it works, basically. So that is where you see people post something like this and you see 200%, 150%. This is what they do. But what they don't always tell you is that a lot of them, they make more losses than profits. They only post it when there's profit, of course, because it's always amusing when you see 80%, 100%. But they won't post it when they are probably 200% down or 400% down, because that doesn't speak well of them. Yeah, so I don't always advise people, especially if this is for advanced traders. This option, margin trading, leverage token, futures trading, it is for advanced traders. So after you've been able to learn the ropes and you understand how market works, this is for probably day traders, people that day trade, whereby they close their position within the day. So it's for, if you understand how the market works perfectly, that is when you can say, okay, I want to use this option. I want to be using this option. So you can leave this position for as long as possible, as long as you want, except if it gets liquidated. Or if it's your stop loss, if you set one, you can decide not to set any, and you just leave it there. So that is how it works. So okay, 6:30. So I said I was going to explain notification, how notification works. So let me quickly explain that. So if you select a coin, let's say you want to know when this particular dusk, when it reaches a certain price. So there's a place called an alert here. So there's an alert here that you can use to know when the price reaches a certain percent, or when the price drops to a certain percent or a certain price. So I want to know when this price reaches to 0.82. Maybe I've been monitoring the price and I want to sell it off immediately it gets to 0.82. So I don't want to place the sell order yet because I don't know what my decision will be. So I will just set an alert. I'll create an alert system. So you can create the frequency of how you want the alert to be. Sorry, and then you create the alert. So immediately the price reaches this 0.82, you will receive a notification from Binance that this coin has reached this particular price. You can create another alert for maybe when the price drops to let's say 8.0. So when the price drops to 8.0, you get an alert. So you can do with it whichever way you want to do. Like whichever way you want to use the details of the price drop or the price pump. You can use that information as you wish. Also, you can set alert for percentage change. So you want to know if there is in the next 24 hours, you want to know if there is in the next 24 hours change, you want to know if there's a 12% change in the next 24 hours for this coin. So you place if there's a 12% increase in the next 24 hours. So that is how to set up a notification and alert system on Binance. So lastly, so let me quickly explain these charts. So when you see interface like this, this is this chart. When I was talking about technical analysis yesterday, this chart is showing the history of this particular coin since inception or since it was listed on this exchange site. So we have the various time frame. So I'm selecting the 15 minutes time frame. This is showing that every of this candle is showing what happens every 15 minutes. So every of this candle has a details of what happened every 15 minutes of this coin. So you can select the coin to know what time it was at that particular point in time. Let me change the, okay. Yeah. So you can select to know what time. It's not showing here, but if you click your phone, if you click on your phone, your usual, okay, yeah, this is what I'm looking for. So this particular, if you select this particular candle was at 10:15 this morning. So each candle has its own details. For a green candle, so let me take this candle, for example, this green candle. This is a candle showing the details of what happened to this coin at, let me see if it's going to pop up. It's not popping up. Okay. Within that 15 minutes, this is the candle. This top of this green candle is showing the highest price the coin reaches at this time. Yeah. So if you select the candle, you even see the details. The highest price it reaches was 0.09. That's the top of the candle. The bottom of the candle, of this green candle, is the lowest price the coin reaches, which is 0.8928. And the body of the candle, this upper body, because it's a green candle, this upper body shows the price the coin closes at. So this particular coin, this particular candle opens at 4 p.m. So at 4 p.m., the coin opens at this price. This was where it opened. This was the price when the coin opens at 4 p.m. This was the price. It opens at 0.892. And at 4:15, this was the price. The price closes, that is price close, at 0.9041. That is for a green candle. So for a red candle, let me look for a candle that has a wick. For a red candle, it's the opposite. It maintains the same high and the same low. So this is the highest during this range. This is the highest, and this is the lowest. Yeah. But the body, the open and close is different because it's a red candle. A red candle means it's made a loss within that 15 minutes. So of course, it means this is the price which it's opened. The open price has to be higher than the closing price. For a green candle, the opening price has to be lower than the closing price. So it opened at this price at 0.90, and then it closes at this price, 0.89. I mean 0.88. So that was the lowest. So this is a 15 minutes candle. This is details of what happened to this coin in 15 minutes. So if you select another option, this is the details of what happened in 30 minutes. This is the details of what happened in 1 hour. This is details of what happened in 4 hours. These details of what happened in one day. So these are the different time ranges. You can actually select yours. You can select a 3-minute candle. You can select a 12-hour candle. You can select a 1-month candle, depending on what you want to see at that point in time. So these time frames are what traders use in making decision. Our traders make in making decision. So there is something called the resistance and the support zone. There's something called the resistance and support zone. Let me quickly explain that. I'm not sure I'll be able to use this Binance chart to explain that. So let me go to there's a tool called Trading View. So I know it can get a little bit confusing for beginners, but I'll still try to explain it. So Trading View, it's basically a chart application where you can check all the details of different coin and stocks and the like. So let me select Ethereum USDT Binance. So I launched the app. There's also the mobile version of this app. So I just quickly want to explain what support and resistance are. So yeah, the same thing we saw the other time, the 4 hours, 3 hours, this is everything. So let's assume you are a day trader and you want to know when to buy a coin or when you should open a position. So let's assume you want to open a position in futures trading now. All of this does not actually matter for if you're a spot trader, except if you want to look for levels to DCA. So all of this chart works based on supply and demand. It works based on supply and demand, and that is how the support and resistance points, that is what they work on. So the support level is showing the level which buyers are ready to buy. The resistance level is showing the level which sellers are ready to sell of the coin. So for every coin, there are support and resistance level. So these are levels based on historical views. So over time, this has been the level where if the price dumps to that price, buyers always set in. Or if the price reaches this price, sellers always sell the coin. So these are what support and resistance level. These are what they mean. So let's say you're a day trader. If you're a day trader, what you need to look out for is probably the 4 hours. You don't need to go beyond the 4 hours time frame. Let's say you are not a day trader. Let's say you're a position trader and you are looking for where to buy a coin when it is low, so that you'll be able to hold it for weeks or for a few months. So what you look out for is probably the 4 hours or the 1-day chart. So the 1-day chart can help you make decision. So with this 1-day chart now, we will be able to chart out the support zones. So these are the support zones are areas where over time, let's say 4 or close to like 5 different points where the market stops, where this particular chart stops. So for this particular coin now, this is like a support zone. This 2727 is like a support zone in such a way that if the price of this coin drops, let's say there's a constant drop, if it reaches this price, there's a possibility that the coin moves up from there if it reaches this price. Because from historical view, this is where buyers set in to buy this coin. So you can set up a line here, an horizontal line. You can adjust it to your taste. So if you check across different months, these are different days, you will see these levels also playing out. If you check you see these levels also playing out. So this is a particular support zone for Ethereum. There is no one support zone, there are different support zones. So at this top, this is the top level where sellers are selling this particular coin. So at 48,800, this is the range where people sell off Ethereum. So you can see at different days, this particular day, that is where people sell off this coin. So you can place a range there. So let's assume you want to take profit from this coin. Let's assume you bought this coin at, let's say, this level, and you are looking at it for long term. You can place an alert system at 4,800 to alert you that when this price reaches this price, there's a possibility of a sell-off at this particular price. So you can set up other mini support zones and mini resistance level. So this is another support resistance level. So these levels are just to inform you of when to buy or when to sell a coin. So you can, the moment you can see close to like 3 or 4 different chart body reaching that particular level, then that level can be called a support or a resistance level. So this is how to set up a support and resistance level. You can also do that with any other coin. You can select any other coin and set up, let's say, .USDT. So this will inform you of when to buy if you are planning to buy the coin, and you don't want to buy the high, you don't want to buy it at the high level, you want to buy it when it is low. So for this dot coin now, let's assume if I want to buy this dot coin, I can see over time that at 23.48, the price always bounces back from that level. So I can decide to set my buy order at 23.48 and wait to see when it clicks. And I can decide to, maybe over time, in recent days, in the last, since December 3 or December 4, the sell-off zone has been something around $31. So I can be looking at, let's say, $31 to sell off this coin. So I can set up an alert system that if this coin reaches $31, I'll be selling it off. So that is how support and resistance works in order to be able to say you want to buy a coin or you want to sell off a coin. So yeah, if you have any question, you can start dropping the question. I know this can be a lot of information for us to process, but I just have to, so you can go back to check some of these things, or you can decide to, so what I would advise you to do yourself, you can decide to go to TradingView, open an account on TradingView, select different coin that you want to buy, and create a support zones, like different resistance and support zones, and probably use that as an example, as an assignment for yourself to show different support and resistance zones. So this will inform where you can buy this coin if you just want to buy, or where you can sell off the coin if you want to sell. Yeah, so this is where I think we'll be stopping today. It's already 1 hour 30 minutes plus. So if you have questions, you can start dropping your question. We couldn't get through DeFi, decentralized finance today, so we'll have to take that tomorrow because it has a lot of explanation too, and I don't want to mobile it up with my current explanation. So if you have questions, you can start dropping your question. If you have questions, you can start dropping your question. If you have question. So I said I was going to drop a link where you can, if you have an appointment, if you think you need to have a one-on-one discussion with me about anything crypto, I'll be dropping the link right now. So you can just, you have opportunity for everyone in this class, you have opportunity to, let's say, a 30 minutes, a 15 to 30 minutes consultant time, one-on-one meeting with me once in a week. Yeah, so I'll be dropping the link so you can select and pick up any time you want that. That's if you have anything to discuss about cryptocurrency. You want me to probably explain some things further after this class. Yep, so you like me to explain margin trading once again. So let me reshare that screen. Okay, margin trading. Sorry. So as I explained the other time, so margin trading has 2 functions, the cross and isolate. So margin trading is just you borrowing money. You are borrowing money. You are using your money as a collateral and you are borrowing the money. So in a usual sports trading, if you buy a coin, regardless of whether the coin dumps or increases, you have the value of the coin. The coin will not get liquidated. Your money will not be taken from you. You still have the same value of the coin. You have whatever value of the coin is at that particular point in time. Sorry, I'm coming. Give me a few minutes, I'm coming. Okay, so as I was explaining, so with margin trading, what you are doing is you are borrowing money. You are using your money as a collateral to borrow more money in such a way that if you have $100 times 3 of $100, that means you are borrowing $200 more, which means you now have, instead of having $100 to trade, you now have $300. But the problem is you can't use that $300 to buy on spot. The only place you can use that $300 to buy is on the usual margin trading, on the usual margin option. You can't use it on spot. That $300 you just bought, you cannot use it to buy any coin on spot. Where you can only use it is on margin option. So you buy the coin on margin option. If you are using a cross margin, it means all of your money, all the money together with the money you borrow, will be used up as a collateral. So when you buy the coin, if you go to the coin and you select the position, you select position, you select the coin, come in. So if you go to your wallet and go to the margin option, so let's say cross option, now you select the coin, you see a place, position USDT, you see the position, you see the price index, and you see the position to liquidate. So if the price falls to that liquidation price, all of your money will be liquidated. That means you won't have the $100 again. The $100 is gone. That is what it means. So let's say you've made ample profits. Probably this coin has done 20% now. So because it has done 20%, it means before you borrowed 100, before you have $100, and probably let's say you don't want to spend the whole $100, you're supposed to spend $50. So you would have gained 10%. Like if it increases 10%, what you would have gained will be the usual 10% of $50. But because you borrowed $200 more, what you have now is you will have $300. And because you want to use 50%, so you are able to buy with $150 instead of buying with $50. So that's the difference. So that's the difference between the usual spot trading and margin trading. So with the margin trading, there's a liquidation price, so that if the market price reaches that price, the total of your money, the whole of your money will be liquidated, like taken from you. Yep. So hope that is explanatory enough. If you don't get that, you can unmute your mic and ask your question. So if you have any question, you can unmute your mic and ask the question. Okay. So do we have any other question? So today we've been able to see how to buy a coin, like from your usual Naira, buying USDT. You can also decide to sell off too. So you can also decide to buy from your friend. Maybe if you have someone, you can decide to buy it. So that means you just give the person your deposit wallet address. You send it to the person sends the coin, and you send the money to the person. But you have to do this with someone you trust and you really know. But Binance has created a peer-to-peer platform option for you to be able to buy from someone you don't know, whereby they stand as the middleman between the two of you. And that is what I explained when we started the class. And also I've been able to show us how to buy a coin, how to set up, how to buy with limit buy, market buy, how to set up stop loss, how to use OCO if you want to take profits. Then I've also explained leverage tokens, what they are. So let me show us an example of another leverage token now. Let me show us, just for us to know that leverage token doesn't only end at leverage token doesn't only end at it doesn't only end as the up and down that I explained. So here in this exchange, this FTX, you won't see Ethereum up or Ethereum down. What you see is Ethereum bull or Ethereum bear, or algo bull, whichever coin it is. What you see is bull or bear, which is the same thing as the usual. So if I select bear, you can see that. So what you see is the bull or bear token. That's what you will see. You won't see bull. I mean, you won't see up or down. So let's check another exchange now. What you see on this exchange, MXC exchange. What you see on this exchange is not bull or bear. What you see is L or S. Someone is asking a question. Can you explain how to buy peer-to-peer using only email address? I've not done that before, but I think I've not used email address only to buy. I don't think there's that function on Binance. I'm not sure. I don't think the only option I've used is where you buy using the peer-to-peer function, the usual peer-to-peer function. Okay, so I said if you come here, what you see is the L and S. So come in. Yeah, they call them ETF tokens. So you can see here what you see is 3x. You see 3L, which means times 3. 3S, which means times 3 down. So what you see in this exchange is not bull or bear. What you see is L or S. This exchange has a lot of leverage token. And the reason they are doing that is because they need a lot of volume on their exchange. It's not one of the reputable exchange I would advise people to buy. They are always one of the first to list any new token. And they have a lot of leverage trading option. And their volume is a bit very low. So I want to advise people to use this exchange. But if you think it's something you want to explore, it's an exchange you can check out. So yeah, so those are the examples of leverage tokens. So I've explained leverage tokens, and I've explained futures trading where you can use more than the usual times 3 and the usual times 5, but it comes at a price. It means you can get your accounts liquidated. Yeah. And I've also tried to explain the basics of support and resistance and what they actually mean when you are trying to look up charts, when you're trying to look up for a crypto charts. You're trying to look up crypto charts. So do you have any other question? Any other question? Okay, I think the email option you are talking about on Binance, I think there's an option for you to send a coin to someone using the person's email address. Yeah, there's an option to send coin using email address. So this is done between two people. This is done between two people that knows each other. It's not done between, it's not done when you want to buy and you need Binance to serve as middleman. So it means I know you, you know me. So I give you my email address, my Binance email address. Let me see if I've not used the option before, but I just remembered someone sent me money using that option. Someone sent me money using that option. I'll have to go to verification. I'm not ready to do this now. Someone sent me money using that option, but I think this is what you have to do to be able to. So you'll be able to send money to the person using email directly without, but you do this with someone you know. So instead of probably depositing or withdrawing, instead of giving the person your wallet address, what you just do is you give the person your email, the Binance email address, and the person sends the token into your account. So do we have any other question? Any other question? So if we don't have any question, we can we'll be ending this class now. So as I said yesterday, so there's a possibility, it's not even a possibility, we'll have to extend this class. There won't be a class on Saturday, but we'll have to extend this class to Sunday. Hopefully we would have been able to cover, because I want us to be able to cover, so right now, we've not talked about decentralized finance, which will take a whole day too. So hopefully we'll be able to get that done tomorrow. We've not done decentralized finance. We've not talked about decentralized finance. We've not done that. We've not talked about earning crypto outside trading, how you can earn cryptocurrency outside trading, ICO, IDO. We've not talked about NFTs, Web3, Metaverse, GameFi, and the likes. And then we need to talk about career in Web3. We need to talk about career in Web3. And we've not talked about security and asset management, although I've made mention of some of that when we were talking about trading, but I still need to talk about it. And then and a full question and answer segment where we can just ask questions based on everything we've learned so far in the class, and also talk about some useful crypto resources. Another important thing we need to know about cryptocurrency. So it's looking like we have something around, it's looking like we'll be having something around 2 extra days as it stands now, because I want us to be able to take up all of these parts so that we'll be able to have a very, very broad knowledge of what crypto is, so that when people talk about some things, we won't be looking at what's this person saying. When they are talking about Web3, when they are talking about NFTs, we will know what these things are, at least on the basic level. We know what these things are. And also, a lot of times I try to want to share some coin on the group, but because I don't know how I will explain it, or I don't know how I will explain, I don't want to just start explaining some of those terms. I just decide to keep it to myself or share it in another group where I know that there are advanced traders there and they'll be able to understand it. So, but I think if we're able to learn all of this, we're able to understand all of this, it will be easier for us to be able to get what all of these details, what they have. So yeah, so if there's no question, I think that will be all for today. Thank you for joining today's class. I'll be uploading the recording immediately after this class, and you can check it. If you've not gotten the recording and you pay for this class, you can just message me so that I can send you the link to the recording. Very soon, I'll move the recording off Google Drive. I'll move it to another place where it will be easy for us to access. So yeah, thank you for joining this class, and have a wonderful day.